Hello everyone, welcome to Elliott Wave Forex.com YouTube channel. This is Henry and today is Thursday, March the 2nd. Time is 4 a.m. GMT. Today we are looking at the chart of Tesla 45 minutes chart here. Now we can see we ended with 1 in the, this is a primary degree here with 1 here, and that means we are currently within the wave 2 pullback, and within the wave 2 it subdivides into a zigzag structure. So we ended with A here, 1 2 3 4 5 waves down ending with A, and then 3 waves up, ABC ended with B, right? And then we have broken below the A again, so that confirms the select is currently ongoing, and we can continue to see a little bit more downside, a few more lows here before we finish a 5 ways down from this B here, right? Because select, it needs to subdivide into 5 waves in a zigzag. Now in terms of potential target lower, again, whether it is an ABC or WXY, which are the two main sort of corrective structures, the potential target is always going to be 100%, right? Technically it's between 100% and 161.8. The idea behind it is that if it is a 1 2 3 4 5, wave 3 usually is the longest and the most powerful, and typically can go to 1.618. so if this is indeed only a wave C and not wave 3, then ideally it should not go past beyond the 1.618 extension of the wave A. Okay, so the potential target is between 186 and 170. So as you can see, this is around $16 range, right? So it's not like a very small range or anything like that. And because a lot of people always talk about specific level, but there is no specific level. It's always going to be a range instead of specific level. So this is the range between 186 170. So it could be 186, it could be 180, it could be 175, and so on, right? Where this select is going to end. Now in terms of the shorter cycle, then there is still basically we're still calling for more downside in the shorter cycle. So if there's any rally in the meantime, most likely it's still gonna fail and still gonna continue to do a bit more sell-off, right, into this area 186 170, and then from there we should be able to find some sort of support, and either from here we go to new high in Tesla, or else, because it's going to be with 2, right, or else we are going to do a 3-ish rally. So let's zoom out a little bit in the 4-hour and talk about alternates, right? Alternates. All right, so here we go. This is the 4-hour Tesla. Now first of all, let me even go back to the weekly or even the monthly. Now you can see this rally here is an impulse in Tesla. We got a pretty sizable correction from the all-time high 400 all the way to 100. That's almost like a 70% correction. You notice if I measure the middle swing here, right? So if I'm using this as the middle swing, and you can see this is a perfect reaction from the 100%. Boom, right? Perfect reaction after reaching 100% in 3 swing, right? Now again, 3 swing is corrective. Now obviously this cannot be an impulsive move down because it's not going to go below 0, right? So it's always going to be bullish if you think about it, right? Because it's never going to be impulsive to the downside. Alright, so this is a corrective 3 swing reaching the 100%. You see the reaction higher from here, it looks impulsive to me. Now let me go down into the 4-hour maybe. Okay, right, so the reaction higher here looks impulsive, and that's what we see before. Basically we ended with 1 in the primary degree here. That's your with 1 here. So in other words, this with 1 here ended this entire rally that started from early this year, from January 6th, right? Okay, so you got a rally, an impulsive rally ended here. So the cycle is ending. You can see clearly the pullback is breaking. I mean, just look at the channel. You can see it breaks the channel, so that cycle is over, right? The cycle is over. So now we are in the wave 2. Now, when we are in the wave 2, as you guys know, wave 2 is correcting wave 1, right? Now, because we are correcting wave 1, the most important level is actually the starting point here, right? It's not technically the most important point is this invalidation, this January 6, right? Even though we can kind of expect three ways pullback, if this is in the form of an ABC, we can find support here. But is the 1.618 the most important thing? No, the most important thing is the January 6. This one looks impulsive, so eventually we can go higher again and break above this previous peak because it's an impulse. So even if you are not really that bullish, you will label this as an A, and then you still need the B, and then you still need a select higher. Eventually it's going to break above this, right? But because we are correcting this cycle, then basically the correction has a lot of space. You can see there's a lot of space here that can be corrected before we finally go higher again. Now we always use the principle of 3 swing, 7 swing. So that means the first correction here, we assume this to be an ABC, and therefore this is the potential support. Now from here, okay, let's assume that this is really the area. Then we could be ending with 2 and go higher. That's possibility number 1. Possibility number 2, this 3 swing here is not enough to finish with 2 because we have enough space to correct. So that could be only what we call ending double correction. So this could be only your W in the form of a zigzag. So you will have a reaction from here, but then the reaction is only going to be a reaction without breaking to new high above this previous peak. And then after the reaction, you fail again and go down again. Now that's what we call double correction or double zigzag. So you got a zigzag here, and then you got a reaction, but the reaction fails to continue the trend that you expect, and then it fails and go down again. Then it becomes a double zigzag, 2 zigzags, zigzag in the left, zigzag on the right, so 2 zigzags, and then that will end Y here, and then that will end you with 2, right? So that's the second possibility before we go higher. But even if we assume this is the one that is going to play out, which it could, but we don't. Basically based on the count here, we are just calling the more aggressive view. We always call the most aggressive view in the direction of what we believe to be the higher degree trend, right? So instead of calling this to be a WXY, we will obviously call it finish here because the direction, we think the direction of the higher degree trend is to the upside due to the impulsive move here. Now, even if this is going to take place, you're still gonna get a reaction anyway. So again, with that reaction, basically you are already safe. And finally, the third possibility here is that the pullback actually is in the form of 5 waves. So in that kind of scenario, you will get something like this. So you will have this is your wave 1, wave 2, and then you got a wave 3, and then you got a wave 4 and a 5, right? So you have 5 waves down, and that will be ending A. And then so it's going to be a deep pullback if that's the case. So you're going to have a 5 waves down, ending A, and then you got a B, and then you got a C, right? These aren't the alternates that a lot of people who are not doing, maybe you're not doing Elliott Wave full time, you might not think about all this thing, right? Now that's another possibility. Now in this case, instead of ending A, B here, this for example could be only with 1 of A. So you downgrade this into the lower degree label, and this is 1 in red, 2 in red, and then you got 3 in red down, and so on. So that's another possibility there. So so just to let you know, couple of different possibilities, right? But I think all of them, depending on how you look at it, whether the first possibility, which is the primary view, like this, or the second, which is doing a double bounce but then fail and go down again, or doing the bigger pullback, 1 2 3 4 5, all three possibilities have the same conclusion. As long as we don't break below January 6, eventually that pullback is going to end, and we're going to extend higher again and break above this 218. So you can say that before it breaks January 6, it will break above 218 first. But the exact pullback structure has several different possibilities, right? Has several different possibilities, and I have explained all the different possibilities. All right, so that's the update for today. And as always, if you want to get more updates, because we update this regularly in the service, you can try our service. We have 14-day trial, and the link is in the description of the video. We also cover indices, ETF, commodities, and Forex as well, cryptos, right? So see you all again, and have a nice day, everyone.